Hello and welcome to this Astranti video on cost classification. This is one of many videos that we are going to be releasing over the upcoming months. We're going to be releasing videos to do with the case study, ones to do with objective tests, one to do with specific topics, and also ones to do with motivation and exam technique and videos like that. And if you want to see more of these videos, then please like and subscribe at the bottom of the screen and visit the website www.astranti.com for more advice and some free samples of the products that we produce here at Astranti. So on to the subject of this video, which is cost classification. And classifying your costs is very, very important as a management accountant. You cannot cost effectively, you cannot plan effectively, you cannot budget effectively if you cannot classify your costs and you don't understand the nature of your costs. So particularly if you are new to CIMA, you're quite early in your CIMA journey, in your CIMA studies, it's really important that you get to grips with one of the real fundamental basics, which is how to classify your costs. And cost classification is ultimately about building a small-scale system for grouping costs effectively. These costs can then be put into various different cost centers, and those cost centers can be used when you are budgeting, when you are compiling your financial statements, etc. And that's ultimately the purpose of a management accountant as well, is to analyze various different costs, understand the nature of them, understand why they are what they are, because this will also allow you to manage those costs effectively, which again is part of your role as a management accountant, because ultimately managing your costs effectively will allow an organization to increase its profit and maximize its profit, which is the purpose of a for-profit business, to provide a return to its shareholders. So in this video, I'm going to discuss various different ways in which you can classify your costs. And one of those is by element, another is by nature, whether they are a prime or an overhead cost and the definition of those two, and finally, whether they are written off as a period cost or written up as an inventory cost. So we're going to start by looking at classifying costs by element. And essentially there are three main types of cost, three main elements of cost. And one is materials, the other is labor, and the final one is expenses. And so let's discuss each of these. We're going to use the example of a company that produces pies, so a shop that produces various different types of pies. And when we're looking at the materials for a pie shop, it would be all the physical materials that are used in production, the actual ingredients that go into the production of each individual product. So this would be things like the egg, the flour, and the butter. For labor, it would be anything to do with employment-related costs. And yes, obviously, the most obvious one is wages, but it could also be additional things, such as pensions and bonuses relating to staff that work within the pie shop. And finally, we have expenses, and expenses are external overheads. So these are costs that are accumulated within the shop, but they are not specific, they are not directly linked to the production, not directly linked to each individual pie that is being produced. So this would be things like the rent on the premises, the bills for the water, electricity, insurance as well for the particular shop, so that if it's damaged in a fire, etc., then we do not lose all our money. Those are the three main elements. You can ultimately split any cost down into one of those three categories. Once you have identified the element, you need to define the cost by nature. And the question that you need to ask yourself when you are identifying and classifying a cost by nature is this cost directly related to sales? Now, I know earlier when we were looking at elements, there was a hint about whether it was direct or indirect, but we go even further in this particular section. And when you categorize cost by nature and you ask yourself this question about whether it's directly related to sales, you can break costs down into two categories. You have direct costs, and these are directly related to each unit of production. So these costs will be affected with every single additional unit you produce, and you can wholly attribute all these costs to each individual unit. The opposite of this is indirect costs. These are costs that are not directly related to each unit, but nevertheless they are important, they are necessary for the business to function. So let's return to our pie shop example now and bring back our three elements. So materials, labor, and expenses. And now we need to identify the direct costs within materials and the indirect costs within materials, the direct and indirect costs within labor and expenses and so on. So let's have a look at these costs. So direct materials for a pie shop would be things like the egg and flour used in the pies, which we discussed in the elements section. But an indirect material could be the spare parts used for maintaining the oven, maintaining the mixer, and all the things that are used for directly producing the pies. For labor, the direct labor will be the wages of the production staff, the wages of the people who are actually producing the pies, whereas the wages of the admin staff that keep the shop running, that keep the business afloat, but do not actually work in production itself, would be an indirect cost, because they're still necessary for the business to operate. And finally, expenses. An expense would be purchasing pie baking dishes that perhaps can be reused several times. It's directly involved in production, but you do not have to purchase a separate set of materials every single time you are doing it. So therefore it is an expense, whereas an indirect expense would be the rent on the office or the electricity, the water, the various different bills. And once you have defined a cost by its element and also by its nature, you can now group and categorize it, whether it is a prime cost or an overhead. And a prime cost is the sum of all direct expenses. So direct materials plus direct labor plus direct expenses equals your prime costs. So if you had direct materials of £5, direct labor of £5, and direct expenses of £5, your prime costs would be £15. And then your overheads are calculated by taking the total of all your indirect costs, grouping all your indirect costs, your indirect materials, your indirect labor, your indirect expenses. So if we had indirect materials of £1, indirect labor of £2, and indirect expenses of £3, then our total overheads would be £6. And we can add our £6 overhead costs to our £15 prime costs to give us our £21 total production or factory cost. So now you can see how we worked through this system. We started by identifying the elements, then we started by identifying whether they were direct or indirect, and once we had defined them by the element and by the fact that whether they were direct or indirect, we can now total our prime costs and total our overhead costs. And once you've done that, you can then move on to the final step, which is to categorize them by a period or an inventory costs. And these are different. Period cost relates to a specific period, whereas inventory relates to the specific product. So a period cost is attributable to a specific time period, not to actual units of production, not to a finished product, whereas inventory costs are related to the particular product or service that is being made or sold. You group all your different costs that are relevant to the product or service and categorize those as inventory costs, whereas a period cost would just be a particular accounting period. So it could be a month, or it could be a week, or it could be a quarter or a year, whatever it may be. And an example of a period cost would be administration expenses, or research expenditure, or advertising expenses, things that are not directly applicable to each individual product. They just occur over a period of time. Whereas inventory costs would be your direct material, your direct labor, and your other production expenses. And the main difference here is how they are treated, how they are accounted for and recorded in your balance sheet and your statement of profit and loss. So a period cost is an expense on the income statement. The entire period cost, the sum of all your period costs, is an expense on your income statement, and it's written off of your profit in the period it has incurred. Whereas an inventory cost is an asset on your balance sheet. All the goods that you have completed, not yet sold, are stored in your balance sheet or your statement of financial position as a current asset, and they are written in there at their current value, which will be the value of all the costs that have gone into producing it. And this continues until they are sold. And when they are sold, the inventory goes down by the value of the product that has been sold, and it is added to the cost of goods section on the income statement. So that brings us to the end of this very quick assessment of cost classification. Hope you now have a good idea of how we can break down and analyze and classify costs. At the start of this video, you might have been thinking that every single individual cost that a business accumulates is just its own individual cost, and accountants have to go through millions of receipts at the end of each financial accounting year to find out the exact specific costs of every single little bit of item or electricity or everything that has perhaps been used over a period. But you can see this is a step-by-step process where you first break down everything by whether it is material, whether it is labor, whether it is an expense. You then break it down further by asking yourself whether it's directly related to sales or whether it's indirectly related to sales, and therefore you can then split these elements down again as we did in this example here. Once you have done that, you can calculate your total prime costs, which is the sum of all your costs that have now been broken down by both nature and element, and your overhead costs, which are your indirect costs that have also been broken down by element. And finally, we looked at how we would store those in the accounts based on whether they were period costs relating to a specific period, usually expenses such as admin expenses and research and development, or inventory costs which are related to the specific product itself, and they are treated differently in the financial statements. Period costs are written off as one big expense in the income reports, whereas assets remain as a current asset on your statement of financial position until they are sold, at which point they become a part of your cost of goods sold. So thank you for watching this video. I hope you enjoyed it and now have an understanding of how and why to classify costs. If you would like to see more of these videos, please like and subscribe at the bottom or visit the website www.astranti.com. So I'd say goodbye for now. Thank you very much for watching, and I hope to see you again soon.